the song is called Home Again. Let's go!
This is Kiwi rock band Shehard's last ever Auckland gig. Among the die-hard fans that night, a self-confessed bogan CEO with a vinyl addiction.
I left school to buy a Cortina in Hamilton.
Simon Tong now heads up Craig's Investment Partners. It manages $32 billion of Kiwis' money in rather volatile times. Does this stuff keep you up at night?
Oh, hell yeah.
But that hasn't stopped a global private equity firm buying half of Craig's for more than $100 million.
Yes, it's worth more than that, yes.
Is it worth a lot more, substantial, or is it just $1 more?
It's worth a little bit more than that.
So, what happens now? Welcome to the NBR Podcast. I'm your host, Simon Shepherd. To appreciate the volatility and uncertainty of trading in the world this year, here's a couple of Donald Trump's positions on tariffs.
Now, these are countries and companies, foreign companies, that have been ripping us off. It's going to be everything, but not all tariffs are included that day.
Here's the market reaction.
It was the worst day for stocks this year. It's been quite a roller coaster ride.
And then add in a couple of complex international wars.
President Zelensky says Ukraine's understanding is that this agreed ceasefire is effective immediately.
In breaking news tonight, out of the Middle East, Israeli fighter jets are currently striking the Gaza Strip. The ceasefire between Israel and Hamas is over.
So how do you manage people's wealth through all of this?
Volatility has been with us for a long, long time. I mean, people continue to look for certainty in what is extremely volatile times and continue to be. Go back through COVID and beyond.
Simon Tong is CEO of one of New Zealand's largest wealth management companies, Craig's Investment Partners.
If you look at the US markets, yes, close to correction or in correction territory. But if you go back a couple of years, the S&P 500, I think it was up nearly 50% over those 2 years.
Yeah.
And so, Europe's up. The European markets are up as a result of Trump's foreign policy. And in the meantime, things like boring, bonds are actually doing pretty well for the investor. So, looking for certainty in what is an extremely volatile world is difficult. I think the key thing is to think about the long-term. A long-term outlook is critical because, if you look over a 5 to 10 year period, markets have a 100% record of recovery. And you only make that loss if you sell. The way that we operate, we've got over $32 billion of New Zealanders' money.
Yeah,
is to have a diversified portfolio, think long term, and then make sure it's personal for your circumstances, which is what our advisors do. And then I was talking to some advisors here in Auckland last week, asking them if clients had been calling them in a panic. And in most cases, admittedly, these were the more experienced advisors. They were like, no, because most of my clients know what the story is. There's the odd one that's looking to take a punt. Is this the time to go? Is this the time to buy?
All in, right?
That's right. You'll get people doing that. But broadly speaking, if you're thinking long term and you've got diversification, you've got something that's personalised for you, then you need to stick to your guns. And if you're in KiwiSaver at the moment, you're actually buying at a cheaper price at the moment.
Okay. I mean, if you've got $32 billion worth of assets under management on behalf of 65,000 clients, does this stuff keep you up at night?
Oh, hell yeah.
Oh, it does?
I look at it every morning.
All right.
I might have said that, I'm not a markets guy by background.
No.
But you are concerned about it. I think the thing about our model that's great is that our business is only successful if clients do well. We are directly correlated to how their portfolios are going, and that goes all the way down to the advisors. That's how they are paid. We do get concerned, but whenever I get into a mad panic about it, I have a chat to someone like a Mark Lister, and he goes, mate, you just need to chill out. Take a step back and look at the last 10 years, and you'll see that actually, in the end, and this might be, think about it as an opportunity.
Right.
Yeah, so
well, go all in.
Yeah,
perhaps not. Anyway, in the middle of all this, right, this uncertainty that you deal with, Craig's Investment Partners has sold a 50% stake to global private equity firm TA Associates.
That's right.
Announced in December. What's the strategy behind that decision?
So TA are preeminent private equity firm,
Yeah.
one of the largest and best performing in the world, and have been around since the late 60s, and have been in financial services for 35 years. They're here with Fisher Funds. They're here with Apex as well, which is another firm people might not be familiar with, and then across in Australia with a number of other companies.
Okay.
So they've got pedigree in our area, and one of the things then when you're the next stop to the Antarctic, as we here are in New Zealand,
Yeah.
to get that global experience and get access to the capabilities that they have is great, because it means that we can innovate, we can learn from what's going on offshore, and we can bring that here for clients. So that's one of the key reasons, and we did a fair bit of DD on these guys to see what they are like to deal with, including our friends at Fisher's. Look, the reports were very, very good, and in fact, our dealings with them so far have been excellent.
What's the attractiveness of them coming to you, though? I mean, why would they want to invest in Craig's?
That's a great question. They love private wealth particularly, and financial services, and they've got a good track record and had some successes there, and they've been at Fisher's since 2017, and from their perspective, that's been a good experience, a good relationship. So, Aussie and New Zealand are good markets. We are, the regulations are reasonably well understood. There's wealth, particularly Aussie is a very attractive market with, their superannuation levels heading towards 12%.
Yeah.
And so when you look around the world, and go back to your point on volatility, we're not too bad an option.
Which is what the Prime Minister's been selling to the world recently as well.
Well, yeah, there is some for that. I think, for New Zealand, one of the things that we do need to get our head around is that we're the size of Melbourne. So that issue comes into it. But nevertheless, if you think about from Boston what we look like, or London, New Zealand and Australia as a market is attractive.
Okay. All right. It's supposed to be completed by the end of this quarter. Is it subject to Overseas Investment Office approval? So that makes it worth 100 million or more, right?
Yes, it's worth more than that. Yes.
Is it worth a lot more, substantial, or is it just $1 more?
It's worth a little bit more than that. It's I mean,
don't you love this coy game about because you're a private institution, you can't tell us what the deal is.
That's right. We're and I mean we've got a substantial amount of money under management, as you've pointed out.
Yeah.
So we've got 650 people. 360 of them are shareholders. So,
right.
So yeah, I mean it's worth a reasonable sum of money.
So that's going to be, for the shareholders, a good return, isn't it?
Yes, and I think that's part of why we're pleased with the outcome, because it's the next phase of growth for our business and what we do for clients. But we've got people down in Tauranga, which is head office, who have worked for 25 to 30 years in the operations team, etc., who have bought shares in the firm through that time, who are finally going to realise some of that as a result of this. But we haven't sold the whole farm.
No.
We still own 50%, and we'll have trading within that for our shareholders.
Okay.
So it's a great outcome, actually.
All right.
And they deserve some credit for what they've done.
They've been sticking with it for
40 years.
40 years.
Yeah.
But will it also create a war chest for future acquisitions? Have you got your eye on something?
I mean, I think acquisitions
or
growth
partnerships or growth.
Growth is definitely part of the picture. So TA unashamedly are a growth investor, and we see that as very attractive, because to my point about the international access that they've got, what can we learn from that? What are the services, the products that we could bring to our clients that we aren't seeing here already that would allow us to grow? And, after 40 years, what are some new ideas that we might be able to bring to the table? So growth is definitely on the agenda, and M&A is one way to do that.
Okay.
Yep.
Merger and acquisitions. You mentioned the TA Associates already has a stake in Fisher Funds.
Yep.
So will that lead to more of a tie-up with Craig's? With Fisher Funds?
Not necessarily. So we actually had a business, a very small business that was similar to theirs called Key Street. And 2 years ago, we sold that to NZX, because they were, you're manufacturing products when you're putting together, a balanced fund or a growth fund, and we're a distribution firm. So some of our advisors weren't comfortable with owning the product that they were selling.
So there's a conflict of interest.
Yeah,
right?
they felt that wasn't right. So we sold that. So we don't manufacture product anymore, which is what Fishers do.
Yeah.
So we would have the same aversion to being too connected to them. But we might offer what they've got on the platform along with everything else.
Let's talk some personal things about you. So you grew up on a Waikato farm, is that correct?
Yeah. Well, in the outskirts of what was Ruakura, or the LIC now out their way. It used to be all farmland, and it's now sort of an interchange.
So you don't go home to the land
There's
anymore.
not much there.
No,
Not
all right.
anymore.
You admit you weren't great at school?
No, not particularly.
No?
No. Terrible, actually. Yeah. I mean, I just struggled with it.
Right.
Really. Concentration was a difficult thing for me in those days. Yeah. So I got a bit bored with maths and those sort of subjects after a while.
Right. And so is there some irony then? Because in your career, you ended up like a specialist really in technological or technology, didn't you?
Yeah, I've sort of just drifted into technology, having left school. So technology's been with me all the way, but I think it is just, part of life these days in business. But not deliberately. It's interesting, I find, I get interested in things that are complex.
Right.
So that's sort of the objective there. But really, I just like to look. The opportunities have presented themselves. That's sort of how I've gone about it.
Okay.
So that's how I've ended up.
So you haven't been laser focused on getting to where you're going?
Not at all.
Not at all.
No. I left school to buy a Cortina in Hamilton. And
did you?
Yes, absolutely. I had a Mark III and a Mark IV, both great cars, and was working at the Housing Corporation doing rent arrears and so forth.
Wow.
And then ended up working for Compact Computer,
right,
which was an extraordinary experience. It was the fastest growing computer company in the world at that time.
Okay.
And that's how I got going. And then
so was it that your exposure to the personal computer revolution that really got you on your track?
That's right. I mean, that was in the late 80s, early 90s. I just stumbled into it really, but just took the opportunity that was presented to me and went for it. And I think that's been the same all along. And ending up working and running FPOS network was the same thing.
Paymark, yeah.
That came out of leaving Hewlett-Packard without a job and someone saying, well, would you want to do that? And I went, hell yeah, that looks interesting. The payments industry was fascinating, the Visa, MasterCard, the banks.
Right.
It's
complex.
It is complex.
But that appeals to you.
Yeah, it was great fun. And trying to protect FPOS here in New Zealand versus the card schemes in Google, that sort of started to become a bit of a theme.
Okay, well, here's a theme then. I mean, I can understand your technology taking it to Paymark and ASB, which you were a senior technology person at. I can see the link, but you also were the general manager, I think, or managing director of a media company, Fairfax.
Yes, that's right.
Okay, for how many years?
Well, nearly 4.
Okay,
yeah.
Was that a rough ride?
Yeah, that was incredibly tough. I mean, I started there in 2013, having come out of Paymark. So I went into the industry without any experience at all. And
did somebody just offer you the job like the other ones, or did you seek this one out?
Well, it sort of came out of an individual who was trying to hire for my previous job, and he said, I've got these people coming over from Aussie, you should have a chat to them.
Right.
And that was Greg Highwood at the time. And so I went out to chat to him, and next thing he said, do you want to do it? And I went, yeah, sure, why not? And I got into it. And to put this into context, when I started at Fairfax, we had 2,500 people. It's huge, right? And Kevin Kendrick was running TVNZ. Mark Weldon was at MediaWorks.
Yep.
Jane Hastings was at APN, which is now NZME. I think across us we had something like 7,000 or 8,000 people, maybe more. And Google and Facebook had just turned up. Facebook were here with 3 people. And by the time I left, which was perhaps 4 years later, I think we'd exited 1,000 people.
1,000 people?
Yeah, because we just couldn't compete. Newspapers, and particularly in our case, newspapers were in decline. We took stuff to the number 1 website in the country.
Yeah.
And we would grow digital by 60% in a month and still lose market share to Facebook. And so you get up in the morning thinking, I have no idea how to fix this issue. Yeah. And
so this was when Facebook and Google became the dominant players in terms of reusing news content.
That's right. The platform economics really came. They'd done that in music, and then they turned up. And so, as we were chatting about earlier. When we went to the Commerce Commission to join forces with APN,
This was a merger, the proposed merger.
the
Yeah.
proposed merger.
Yeah.
We spent 18 months on that. Our point was, the issue that was put in front of us was that the polarity of voices in the market would be decreased. And what we were saying is it's happening anyway, and it will only accelerate because these platforms are able to take our content and generate views far, far better than we can. They run the algorithms. So the better our content is, the better they do. And they're not creating content. But unfortunately, the Commerce Commission's perspective was that they weren't in our market by market definition because they weren't content creators.
Right.
And we're like, mate, that's the point. So I'm just frustrated with where we've got to because...
I mean, when you look at the mediascape in the last year,
Yeah.
I mean, what do you think?
Well, I'm not surprised by it at all. In my time, TVNZ had some level of protection because linear TV still dominated.
Yeah.
And then also radio was doing very well.
Yep.
I think NZME, despite what's going on at the moment, have done a pretty good job actually of profitability with their, One Roof and so forth.
Yeah.
It's not easy. And what I learned in media is that from a journalist's point of view, for a lot of them, it's a calling. It's something they decide to do. They don't do it for the money, like a school teacher or a nurse or, and we need them. But, we haven't really done anything to
So we haven't
resolve the
fixed this
issue.
market
No,
yet?
not at all. No. In fact, because of our scale, it's even more of an issue because when I left, there was 5-1 of journos now in PR versus journos asking questions.
Right.
It's pretty tough.
Yeah.
So, yeah, I think it's disappointing, and it's unfortunate. If you go back, I think, to the case that we put, you'll find that most of what we predicted
Has come to pass.
it wasn't particularly difficult to predict,
Right.
in my view.
Okay. You don't have a magic wand. You can't fix it?
I don't. I mean, I used to wake up, like I said, I used to wake up in the morning thinking, how the hell do I fix this? We're going as fast as we can. I mean, we set up a fibre business.
Yeah, that's right.
Started
Stuff
selling,
fibre. Yeah.
started selling fibre on credit cards. We went into travel. Like, we didn't care how we paid for the journalism.
So you really try to diversify the business to be able to pay for the journalism.
I think the point was, why are we so fixated with advertising being the way to pay
do
for
it,
it?
yeah.
Who cares how we pay for it? Should we go into bathroom renovation?
Right.
Like, what does it take to pay for the journalism is the sort of thinking. Yeah.
Okay. Well, nobody's still really worked that out. Okay.
No, unfortunately.
We'll leave that.
Unfortunately.
Somewhat gloomy note then. I just want a couple more personal questions, then we'll let you go. Do you have an addiction?
That I would admit to, yeah.
Yeah, that you would admit to.
Vinyl's is my thing. I got back into vinyl through COVID, having had a very reasonable record collection in my bogan days in Hamilton. Most people would not want. And so, yeah, I've really got into it. And what I've realised is that if you go back to, Led Zeppelin albums or Doobie Brothers albums or Supertramp or whatever you want to listen to, you put the records on and you get that original sound. And it's just fantastic. Yep.
Do you have a Spotify account?
I've got Spotify as well. Yeah.
Yeah.
I've got that. I've got high def. I got the highest def digital that you can possibly get, but it's not the same.
Not the same.
No.
How many albums do you think you own?
I've got hundreds, but I need thousands. And I need somewhere to put them.
Right.
Because they weigh a lot.
They do, don't they?
So that's my next issue. But there's so many more albums that I need.
So many more albums.
Yeah.
So if there's so many more albums, do you have a music genre that you just can't do without? I mean, you said you're a bogan.
I'm a bogan, yeah. So anything that's alternative and metal and so forth, hard rock is me. I was She Had the other night, no worries.
Yeah.
Rocking out. But I've loved New Zealand music. So Salmonella Dub, Shapeshifter, anything New Zealand, I'll listen to. Fur Patrol.
Yeah.
So, and some of those sort of bands, the number of vinyl releases are very hard to find. Dragon, track one down from Dragon, had to go to somewhere in the UK to get that, drag it back. So,
have you ever calculated the cost of your addiction?
Well, there's an app called Discogs that you can use, and you put all your stuff in there, and it tells you what it's worth. Which is broadly speaking what it costs.
Have you done that?
No, I have got it, but I'm not going to tell you how much that is.
All right. Just finally, so looking back at your career, I'm not suggesting you're retiring.
No, good.
But looking back so far, I mean, if you had a greatest hits or there was a theme of an album, what would your album be?
Well, I think it would be, have a go, take the opportunity, because, the thing that I've benefited most from is people giving me a chance to jump between different industries. And that's been hugely beneficial. What you find is that the people issues are often the same. You've got people that are deep in there, whether it's payments or media, those that just do 9 to 5 because they couldn't give a toss. They want to go and do surf lifesaving.
Yeah.
And everything in between. So you see that in every industry, but the uniqueness of the industries and the challenges are what's most appealing. But you've got to be prepared to just have a go. So that's the thing that I've benefited from, and that would be what I would say to anybody.
All right.
Because I'm not an expert in any of these things, but it's been really good fun.
And that wraps up this episode of the NBR Podcast. Links to social media clips used are in the description. And thanks to content producers Jack Latham and Joseph Hisayasu. Remember, for early access to new episodes, subscribe at nbr.co.nz. Up next, the business of running a charity. I'm Simon Shepherd. We'll catch you then.